As goes January, so goes the year. If that saying's to be believed, moves in financial markets at the start of the year indicate where they'll be in 12 months' time. And with global stock markets currently taking a battering, traders may have to brace for a grim 2016. A key source of that turmoil, the world's second biggest economy, China. Asian and European stocks have tumbled this week, as worries about China's weaknesses and the Communist Party's response fuel a sell-off.
The concern is that both what they had done on the currency front and also looking at the market volatility itself were indicators that things were not going particularly well in terms of economic growth. And that spooked the markets all around the world. And whatever happens now, the underlying reality is that we are looking at China growing a lot more slowly. There are some people who fear a hard landing. And if that is the case, then obviously the reverberations all across the world are going to be very significant.
The turbulence in China has brought to surface a deeper fear about Beijing's grip on the economy. The Asian powerhouse is cooling, and this transition could be messy. The latest batch of data shows China is facing problems on multiple fronts: industrial overcapacity, declining exports, falling property investment, rising debt levels, and a depreciating currency. Top officials have been experimenting with a range of measures, but at times they seem to be on the back foot. And with decisions being made behind closed doors, the lack of transparency is rattling many investors who've long suspected target figures are inflated.
If the market is looking at a 6.5% GDP growth rate as an official target, the sort of number we're expecting for this year, I suspect that the real number is much closer to 4%. So really the absolute number isn't as important as the trajectory, and the trajectory at the moment is down, down, down.
China's authorities have acknowledged the country's slowing pace of growth. They're aiming to push through new reforms and regulations, including lower business taxes and ways to boost consumer demand. It seems Beijing's entering a new era of economic management, but with investors' confidence waning, it can't afford another slip-up. Sarah Hemrajani, The Newsmakers.